Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how the stock and crypto markets absolutely tanked today as we kicked off the new trading week. We will go on to discuss a few reasons why this pullback may have occurred. I do, of course, want to talk to you guys about some of the price action that I personally foresee ahead for some of the big dogs. And I also want to talk to you guys about the silver lining that I see in all of this. And by that, I mean a few sectors within the markets that I think could begin to thrive in the case that we do see more continued downside in the equity indices. All right, so let's get into it. As always, we'll quickly go over each topic we're going to be discussing, and then we'll dive in. All right, so in front of us, you guys know the drill. Trading View, where we'll cover technicals and price targets on the following names today in this order. Going down the watch so you guys can see right on the right. Kick it off with the good old S&P 500, king of the equity markets in my opinion. So SPX, move on to the triple Qs or the Nasdaq. Nasdaq faring a little bit better. The S&P did worse. Dow did absolutely the worst. So legacy industrial plays did have a toll taken on them today. Not going to be covering the Dow because I personally just don't trade that at all. The S&P is about as far into legacy as I personally go. So we'll cover the S&P, we'll cover the triple Qs. We will then move on to VIX and VIXY, okay? So the VIX, as many of you guys know, the CBOE volatility index, this is inversely correlated to the S&P 500. So when the S&P 500 goes down, the VIX goes up. When it goes down more than expected, when you are seeing that volatility, that's when VIX and VIXY, which is an ETF that trades the VIX, thrives. Okay, so you can see the VIX was up 21, almost 22% today. VIXY was up 15% today, at least closed the day out at 15%. At one point today, I believe VIXY was up almost 20%. Absolutely insane price action. But that's what happens when we see volatility in the S&P 500, okay? So we'll cover these three. Of course, S&P, triple Qs, I do personally see more downside ahead. We'll get into why that is. Before we even dive into the charts, of course, you guys know we always have to set that fundamental base layer for our overall argument. So we'll kick off the video once we actually dive in with this article. CNBC, what's behind the sell-off and why it may signal a bigger correction. So we'll go on to read a few paragraphs here. There's a few analysts that gave their opinions on the sell-off that we saw today. Again, you guys, never just put all of your eggs into one basket. Never just listen to one analyst or even a small batch of them. But it's always good to use the thoughts of reputable individuals or whoever who has been deemed reputable. Use the analyses of reputable individuals to supplement and complement your own thoughts, okay? So there's a few good thoughts in here. I do agree with a lot of the statements said. We'll go over a few paragraphs from a few different analysts and just once again use that to supplement our own opinion on the matter. Spoiler, I do think more downside is ahead after a bounce. So I do think we'll bounce, and then I think we'll see more downside ahead of that. Again, you guys, always remember, everything in this video, this is just my opinion. That's important to remember, aside from literally the quotes that I'm reading in these articles, okay? So we'll kick it off with this before moving into the crypto stuff. So after that, after we talk the greater equity markets, again, the equity indices, we will move on to talk the good old crypto markets that are bouncing at the time of recording. But this my watch list did just recycle about an hour ago. So about flat, but they are down about 3%, 3 to 4% Bitcoin and Ether at least over the course of the past 24 hours. And there, you guys know the drill there. I do foresee more short-term downside ahead. Still long-term bullish on pretty much everything that we're talking about today, aside from, VIX and VIXY, great trade potential. But long term, the S&P, the Nasdaq, the Bitcoin, Ether, I do think that they're all going to see a lot of upside over the longer term. But short term, things have just been ripping, aside from Bitcoin and Ether. In that case, I do still think that a little bit of correction is ahead prior to more upside, okay? So I want to make that very clear right off the bat so you guys don't get all upset, okay? Okay, and then after crypto, I guess before crypto, so we'll kick it off with this article right here. Again, set that fundamental argument, the fundamental bear argument, I guess, for the equity indices. And then before we move into crypto, I do want to talk to you guys about this headline, okay? So tomorrow, I think I'll actually get into this article, but this headline is titled, Cathy Wood's ARK Innovation Rises a Mid-Market Plunge. Here's what's working in her fund. So it's not necessarily, what's important with this is not what's working specifically in her fund. I don't really care about that. It's just the general sentiment that this price action is displaying, okay? So investor sentiment is changing, and that's kind of what we'll go into in this as well. Like just the way investors are thinking right now and the way investors are approaching their investments and they're trading the markets is changing as we see a lot of capital flow out of the big caps into more growth, okay? So again, we'll just read this article. We almost don't even need to go back to it today. But before we dive into crypto, I quickly want to scroll down the watch list and talk to you guys about a few sectors that were able to weather the storm today. So as the markets, again, the equity indexes indexes, S&P, the Nasdaq, the Dow, absolutely crumbled. Not absolutely crumbled, but I mean the biggest pullback we've seen in a while. Saw a very significant pullback. There were some sectors in the market that was, once again, withstood the storm, and that I do think will continue to do so if we do see more downside in the equity indexes. Okay, so we'll talk about that a little bit. Move into cryptos, move into Bitcoin and Ether on the charts, and then we'll close it out with the Dixie. Okay, or the U.S. dollar index is the U.S. dollar weighted against a basket of other international fiat currencies. Okay, so we'll close it out with the Dixie just because Dixie is like the foundation of all macro analysis. I will consider this a macro analysis video, so we can't not talk about Dixie because Dixie is very important in the sense that you guys know the drill. Everything that trades against the dollar will ultimately be impacted by the dollar's price action. So we'll just close it out with the dollar, close it out with some macro thoughts, and that will be the video. But to kick it off, I do want to read for you guys the short intro to this morning's newsletter that I sent out, obviously, to the portfolio newsletter group. And we'll do that and then dive in. All right. So, sheesh, what an eventful Monday in the markets. If I'm being honest, I love to see this type of volatility as we kick off a new trading week. It makes me that much more excited and confident in the days ahead. Although all three of the equity indices are getting pounded today, certain sectors are withstanding the storm beautifully. Thankfully, EVs and space are one of them. It's extremely validating to see that capital is flowing into more promising areas of the market, EVs, green energy, space, etc. As it flows out of the blue chips, large market cap stocks. This is the moment I've been waiting for, and I expect this trend to continue. We'll cover some COVID biotechs as well, of course. Okay, so today, again, that's what we'll get into kind of in the middle ground of this video before we hop into the cryptos. And the reason I wanted to share this headline with you, again, we'll get into this probably in tomorrow's video when I actually cover some of these stocks, like all the EV, green energy, space plays on the charts, which will be over the coming days. I'll actually take a look at this article itself. But again, you guys, it's just showing, like I said in just a little while ago, that silver lining. If we do see capital flow, like this is a lot of capital. There's so much hot capital out there right now, you guys. There's a lot of capital that wants to be put to work, even in the case of the equity indices do continue to fall. So again, this does make me very bullish on growth. As I said, EVs, space, biotechs, the three sectors that I'm specifically the most bullish on right now, and do comprise a significant amount of the portfolio, do show a lot of promise to me. And again, you guys, there's always a bull market somewhere. It's just understanding how to spot that before everyone else does. And that's the game of trading right there. Okay. So again, got to do some housekeeping, got to do some shout outs before we actually dive into the charts and the articles. Please, you guys, give the video a like if you do go on to gain value from it today. Subscribe to the channel. If you're new around here, want to catch more content like this, drop a comment below. Let me know what you think about any of this. Let me know if you think I'm completely wrong. Let me know if you agree. Always love to hear your guys' insight and talk shop with you guys down there. And of course, if you guys do want one of these bad boys in your email inbox every morning, this also includes a whole bunch of charts, my rationale as to why I'm trading the way I'm trading, and of course, complete breakdown of every single position in my entire personal portfolio, updated every single trading day during market hours. 15 bones a month. First link down below. Really means a lot, you guys. I do my best to make this worth your time. I mean, $50 a month or $40 for every 3 months. Just hook it up a little bit if you guys want the 3 months. And again, this is comprised of my entire portfolio. I do obviously send out the email newsletter every single day, but I also have the daily newsletter PDF in the course curriculum as well. And you guys do get the exclusive Sunday stock watch. Just threw that out yesterday. That was like 38 minutes long, so that was a long one. And yeah, you guys, the good old Sunday stock watches are no longer public on YouTube. I still upload them on YouTube, but there is now a private link that I send out to the newsletter just to the Waves fam. So if you guys do want to join the real Waves fam, the second tier, the third tier, I guess, whatever you want to call it. Again, $15 a month, $40 every 3 months. First link down below. Really means a lot, you guys. Let's get into the video. Once again, before we dive into the charts, I do want to read this for you guys. Go over a few differing opinions, kind of along the same lines, I guess. But once again, to complement our own opinion on the matter. Some stock strategists say Monday's market sell-off triggered by COVID-inspired global growth scare could be the start of a bigger correction of 10 to 15%. Worries, and again, as we get into the charts, this 10 to 15% range will make a lot more sense as we actually dive into some of the technicals and trend lines, all right? So 10 to 15%. Worries that COVID variants could impact the global economy spurred a sell-off across the world stock markets. The Dow fell 725 points, about 2.1%. The 10-year benchmark treasury yield, which has been moving lower for weeks, slipped below 1.2%. Investors are looking at it as a canary in the coal mine, CFRA chief investment strategist Sam Stovall said in a drop in bond yields. The S&P 500 was off 1.6%, ending the day at 4,258. Stovall said the correction in the S&P could be as steep as 10 to 15% and could reach its 200-day moving average at 38.95. It will probably end up not being a pullback, but a correction. That's important. Again, you guys, not a pullback, not a market crash. This is just a corrective movement because things have been running so damn hot. Stovall said a meaningful correction, not a new bear market, but a meaningful correction in stocks that will adequately reset the dials. Again, that's corrections, as we always say, you guys, are a healthy part of every bull market. They're necessary for the long-term health of any financial market. A flagging rally. Earlier, Morgan Stanley chief U.S. equity strategist Michael Wilson said in a note that the rally showed signs of being exhausted and investors could shift to defensive sectors. He said the market is in a transition and could hit a 10 to 20% correction. Again, these percentage pullbacks will make more sense as we dive into the charts. Quote, bond investors are certainly questioning the reopening. We got a sense of that before, said Jack Ablin, Chief Investment Officer at Crescent. Certainly, there's legitimate concern, but I think when we get to the other side of the hill, we will get back to whatever it is, a stable state. I still think interest rates are just way too low. Ablin said his model shows the potential for an 11% stock market correction. Quote, to me, I wouldn't use this as a signal to get out. Certainly, there's peak growth, peak profits. I do think it's a correction. I would be concerned if I started to see credit spreads widen and lenders start to choke off credit, which we're not seeing at all. So again, you guys, things are just running too hot, but from like a bare bones perspective, from an actual economic perspective, there's not much of a reason to think that we'll see a crash, but once again, a correction. Growth is peaking. The economy is expected to have grown by about 9% in the second quarter and 7 to 8% in the third quarter. Corporate profits are also expected to have peaked in the second quarter with a gain of more than 65%. Some of Monday's biggest declines were in cyclical stocks that have benefited from the reflation trade. Oil plunged more than 7% after 7% declines last week. Energy stocks lost 3.6%. Financial stocks were down 2.8%, and industrial stocks fell 2.1% Monday. Once again, this is why the Dow, as opposed to the S&P and Nasdaq, the S&P kind of middle ground, industrial, modern age. The Nasdaq obviously very tech weighted. The Dow is very industrial, and that's why it's been it saw the worst of it today. Okay. Steve Sosnick, Interactive Broker Chief Strategist, said he doesn't know if the pullback is signaling a correction, but it is a sign that investors are viewing the market differently. Again, this is important. What we're seeing today is forcing people to reprice things. When that happens, I think you're less likely to get a snapback rally than when it's a garden variety overbought, he said. I think that's the difference between today. I think that's the difference today than some of the other dips we've seen. This could be a little more lasting, but I'm not saying sell everything and head to the hills. Okay. So the common theme here, you guys, is that there's probably going to be a little bit more correction ahead in the greater equity markets. Okay, once again, in the equity indexes, but the underlying fundamentals are still there. There's still so much capital that wants to be put to work. There's like all the specifics these guys are saying that I don't want to repeat are still in play. There's not the signs that the market's just going to crash. Okay, that doesn't make sense. But a correction just because things have been running so hot is warranted, and that's what I personally believe as well. Let's talk about some of the technicals right now. Okay. So from a technical perspective, I did draw this up on Thursday, and it followed it pretty darn close. Okay, so on Friday, as we closed out last trading week, as the equity markets did see some pain as well as we closed out last week. We saw a big gap down today, big gap down. Closed the day exactly on this previous high, which is where I expected from Friday. That was about a 2% drop, 2% price decrease from where I drew it at the time. That I think I threw in the newsletter, but regardless, we did come down. We obviously closed the day exactly on this previous high prior to this big shorter term rally that we kicked off in mid-June. Bounced off support, kicked off that rally. But today, the big thing is that for the first time in a very long time in the S&P, we closed a daily candle below support, and now the trend has officially been broken. So if I'm going to get short term, you guys, all the charts we're going to look at today are going to be on the daily candles, but we'll go to the 4-hour just for this right here. When it comes to the bounce, okay, I think we will bounce up. I think tomorrow we will bounce up, and in proper fashion, use previous support. This is a very, very strong support line. After we hop back into the daily candles, I'll zoom out and show you guys why this is such a strong level of support, why this is such a strong trend line. But TA 101, technical analysis 101, using previous support as new resistance. I do think tomorrow at the very least, we'll probably see a bounce up here. Like, what is that? Maybe 1%. I'm not going to do the price range right now, but up here to test about the $4,300 level. Just below that, $4,290. So I do think that we will bounce a little bit prior to seeing more downside, but I do think a small bounce to retest previous support and new resistances ahead prior to more downside, okay? So let's go back to the daily. I'll just show you guys the significance of this trend line right here. This is a very strong trend line, you guys, okay? And this dates all the way back to the base way back here in October of 2020, okay? So you can see bottomed out right here, double bottom, following this double bottom, classic double bottom, led to more upside, and that's what really sparked the current rally that we're on right now. So this is lasted the better part of like almost 10 months now, like 8 to 10 months. The current rally, the current uptrend that we're on is in play. And you see touch point here, another touch point here, obvious line of support, came down perfectly in mid-June once again, prior to this current short-term rally we're on, perfectly tested that 2 daily candles, bounced off of it, and then we just ripped straight up, okay? So this line of support is a line that every single technical analyst, every single trader who's trading the S&P is looking at. It's officially been broken today. And once a trend line has been broken, we'll take a look at this in BTC. That's when, as many of you know, I liquidated a lot of my cryptocurrency holdings, was when Bitcoin broke the overall line of support. Again, even if we do see a bounce, I still think there's a lot of potential in, again, like VIXY calls, VIXY shares, if we do see a bounce, because now that support has officially been broken, that's when you usually see an extended correction, okay? So where is my overall correction target? It's going to be at least here. I do think, short term at the very least, I think after a bounce we'll come to the next step is to come to here. So maybe bounce up, retest support, previous support, new resistance, come back down another like 1.5% to retest this high over here. You can see that this was tested, so we'll probably see a little something go on there, but I think after the bounce we will likely just tank right below that. And I personally think that this area is in play right here. So keep in mind, you guys, this looks like a significant correction. This is going to be from current levels. Let's bring this right here. From current levels, this is going to be a 6.5% correction. This is kind of my short to medium term target after tomorrow's bounce, which is just going to take us to the previous high prior to just absolutely going like parabolic pretty much, okay? So an important thing to remember here, once again, this does look like a pretty staggering pullback, but this was just in March. This was just in March of this year, okay? So that's not that long ago. Overall target, if things really do start to get ugly, I would not be surprised if we come down here, see a 15 to 16% correction from current levels. That would take us to this high back here in just under a year ago. So about 10 months ago, in late August, early September, this high right here, before we started going sideways, before this line of support right here, this high right here, once we broke out of these levels, that's when we pretty much just started going straight up for a few months here, like going over the course of winter. And I do think that this level right here will definitely come into play. And once again, that is going to be about a 15 to 16% correction from current levels. Worst case scenario, in my opinion, is going to be to retest the high before all this happens. So actually, this is going to be the high prior to the pullback in March of last year, before the Black Swan event, okay? So S&P's high in February of 2020 was about 3380. That is going to be a 20% correction from here, just because of the current state of the world, because there's so much capital that's been printed, because money is worth less than it was then. I can't imagine we go that low, but I can see, and this is worst case, this is realistic kind of worst case scenario in my opinion, is this 15 to 16% correction, which would retake us once again, reversion to the mean, to the highs in September of last year, which would be around a 15% correction from here, okay? So pretty similar thing here, you guys, triple Qs. We'll take a look at VIXY quick prior to getting into crypto and stuff. But triple Qs is still has been ripping. It saw less pain today than the majority of the market, once again, because the Nasdaq is more tech weighted. The primary sectors of the market, as we just read, that took the biggest hit. We're reopening stocks. We're kind of those industry, like the legacy players, the industrial players. So tech will always withstand, especially as we move forward. You guys know the drill. Everything is trending towards tech. As we move forward, tech will likely be able to withstand the storm a little more. But from a technical perspective, just the Nasdaq has been ripping so hard. It's more overextended, I would say, than any of the other indices. So I do think that at the very least, the Nasdaq will come down, definitely to test this line previous line of resistance, once it broke out of this, we went straight parabolic. I mean, we were ripping over here, but it pretty much just ripped straight through this. So I do think that, once again, previous resistance will come into play as new support. Very short term, we'll probably see another move down to test this, bounce up a little bit. Ultimately, though, I think it's almost inevitable that at the very least, the Nasdaq will come to test this very strong line of support right here. Again, dating back to late October. Touch point here, touch point here, touch point here. Definite line of support that's in play. I think if this is broken, it's almost inevitable that we will see a pullback to here. By the end of July, that would take us to about almost a 6% correction, okay? So estimate for the Nasdaq, just straight up, is going to be at least 6% down from here. Similar principles apply, you guys. Excuse me. If we do continue to pull back more, August of 2020, September, I mean, I guess September 1st of 2020, we were back here. So not even a year ago, we were all the way back down to 300. I think this could be worst case scenario if things do get crazy. And similar to the S&P, you guys, that would lead us to a 14.5% correction from current levels to retest that high. And I really can't imagine, once again, because everything is trending towards technology. Technology is not going anywhere. It's only going to continue to expand and grow. I cannot imagine more than a 14 to 15% correction in the triple Qs. All right. So let's talk about let's take a look at VIXY right now. So VIXY, you guys, we'll take a look at the VIX because it's a little more realistic. So VIXY, I mean, better late. I mean, getting pretty close here. This might occur. I think I probably drew this target at least 2 weeks ago. I mean, I drew it over here. So June 23rd is when I drew this. So yeah, like 2-3 weeks ago almost is when I drew this. Almost a month ago, actually. Jeez, time's flying. But drew this almost a month ago. It's gonna be funny if that plays out. Just went to the end of July. So VIXY, again, just looking at basic trends, it's kind of weird to look at VIXY on the chart in all honesty, but just looking at VIXY's chart shows you what it's capable of when the markets see volatility, when specifically the S&P 500 sees volatility, because the VIX is, once again, directly inversely correlated to the S&P 500, okay? So I do think it's very possible for VIX, once again, like even drawing trend lines on the VIX is kind of weird. But if we do see continued volatility, I would not be surprised at all to see a significant move like this. So let's just do a price range because I feel like that's a little more appropriate. From bottom to top right here, VIXY, like during the span of just a week or just a couple of days, went up 77%, okay? So I wouldn't be surprised to see a base right here, like the base right there, up 77%. Would take us pretty damn close to this price target, okay? So I would not be surprised to see like 28, 29 bucks in the VIX if we do continue to pull back a little bit more. And of course, if the VIX does well, VIXY is gonna trail. It's gonna do a little less from a percentage perspective. VIXY is going to underperform compared to the VIX because all ETFs are ultimately like degrading, especially when they're kind of like linked this way. But yeah, I think the VIXY could definitely see some very, very promising price action in the case that we do see more downside in the equity markets, which I do think we will. Again, you guys, let's just go down the watch list right here once again. ARK rises. So this is just bullish to me, because it speaks to the fact that we could see growth stocks start to grow again after some very, very extended pullbacks in a lot of these sectors, specifically EVs. So again, plays like CCIV, Workhorse, like the plays you're seeing in the green today. CCIV, still so bullish. The merger's happening this weekend. We will likely be seeing LCID here instead of CCIV. Super exciting. And I think this is going to be buy the hype, buy the news event. So we will be covering it once again, all of these names over the next couple of days. Workhorse, plays like Workhorse, QuantumScape, Helion was up for a little bit. ChargePoint, Blink, these green energy plays, like doing very well today. And again, in the wake of market turmoil, greater market turmoil, it's so promising to see these names, see these growth names that have been hammered over the past couple of months start to do well. And once again, as capital starts to flow out of the plays that have been doing extremely well over the past couple of months, again, just like the Apples, the Amazons, their market cap is so much bigger. And as capital flows out of that capital can go a lot further in these small market cap plays, in these hyper growth plays, than it can in like the mega caps like Amazon and Apple. So a lot of capital, I assume, will be looking to find a home if EVs, green energy space, again, SPCE, Maxar, a new face in the portfolio, shout out portfolio group. Maxar looking very promising, picked up more of that today on the massive dip, already significantly up on that trade just from doubling down on my position today when it was down like 15%. So a lot of potential here, you guys. Bezos flies into orbit tomorrow. Very good optics for space. And again, you guys, just as things start to pull back more, it makes me very, very bullish on these plays. Obviously, biotech as well. Over the course of this week, I might talk about biotech. Thankfully, like I bought a lot of Moderna at 30 bucks, as a lot of you guys know, 33 to be specific. So that's almost at 10x. Actually took a little bit of profits today on Moderna. Novavax absolutely ripping today, up like 15% at one point. So Biotechs will also act as a hedge because the Delta variant is obviously kind of talk of the town right now. Very unfortunate, but that's the reality. Just spotting the trends, you guys, spotting the macro trends. Biotechs, not only is the Delta variant obviously catalyzing movement, catalyzing upward movement, upward price action in COVID-related biotechs, of course. But when the markets sell off, again, that capital's going to want to go somewhere. And biotechs at this point in time seem like a safer area, safer sector for that capital to go into, okay? So that's how you have to think about it, you guys. Again, if you guys are invested or trading big caps, just remember that capital can go a lot further in smaller market cap stocks that show a lot of promise and have been getting absolutely smoked for the past few months. All right, so let's close it out with some crypto convo. Take a quick look at BTC. BTC still very evidently in a downtrend, and my price. There's not much to talk about here aside from, I mean, it's to be expected. So volume is absolutely non-existent at this point, and especially that makes me have to believe that another big move down is ahead. And I still think we're coming down to at least $24,500. Conservative price target for BTC is 20K. Absolute downside price target for Bitcoin is going to be $20,000, but every trader is going to be expecting that. So absolute downside price target for Bitcoin is going to be $21,000. At that point, I'm absolutely loading up. Ether, pretty much same story, you guys. You know the deal here. Ether did actually break this line of support right here, and you can see is once again below it. Okay, so we are now currently broken below this again, 2 daily candles below. I think Ether is also going to revisit the mean, reversion to the mean, a revisit of the initial high of this overall rally. That'll take us to about 1350. I'm comfortable personally buying Ether at $1,400. Again, complete portfolio daily newsletter if you want to know exactly when I'm picking that up and exactly how I'm kind of structuring that my buying as we move over what I believe will be somewhat of an extended capitulation range, or just sideways range, just pretty much trading sideways for a decent amount of time. Okay, so Bitcoin, Ether, again, you guys, there's nothing surprising to you there. Those price targets have been in place for the better part of like 2 months now, so I'm just waiting patiently with my dry powder at the sidelines, just ready to strike, baby. Okay, so close it out with good old Dixie, because we can't do a macro without talking Dixie. Dixie is just in a series of ascending channels following this breakout. Again, Dixie saw some crazy price action up here and is also not only in two pretty like ascending channel right here, obviously broke above that, absolutely ripped, now in another kind of ascending, I guess it's like almost an ascending wedge pattern, but I'll call it an ascending channel. I still think that we probably will see more upside, although this is the weird thing again, you guys. With inflation running hot, intuitively, Dixie, I mean, I guess people do want dollars because they need more money to buy like just everyday goods, but from a market perspective, from an economic perspective, if inflation is running hotter than expected, the dollar should be doing worse. And inflation hedges like Bitcoin and gold should be doing better, but that's not the case. Regardless, from a technical perspective, Dixie does look good, and we are still in this massive megaphone channel. Of course, obviously megaphone because it looks like a megaphone. This is not by any means these are not perpendicular lines by any means. Big old megaphone pattern. So if we do see the dollar start to rip, like if everything continues to pull back, if like again, equity indices of Bitcoin, if golds do continue to pull back, gold and silver getting smoked, I will make a video on them on Friday. Gold sponsored video, you guys know the drill there. But gold and silver talk on Friday also getting smoked. Those are most inversely correlated to the dollar because they are very traditional inflation hedges. So if we do see the dollar continue to rise and really do come up to test the top side of this megaphone channel, that could take us almost back up to 100 on the Dixie. Just call it 99 by September. If we do see, once again, a elongated pullback in equities and gold and Bitcoin, etc. This could last until September, and that's just where my price target's drawn. That would take us to 299. But again, long term, I still feel like the dollar is gonna inevitably see more downside. Like that's just the reality of things, especially because the way things are looking now, we're probably gonna have to print more if employment stays bad, if Delta really poses a risk, which I really don't want it to. And I do remain optimistic on the fact that we will not lock down again. The US at least will likely not lock down again completely, because that would just lead to complete civil unrest. I do think the dollar can do well, but ultimately if we get up here, this is going to be a great opportunity for me personally. This is where, like, if the dollar does get up to like 99, at that point is where I'm going to use a lot of the dollar reserves I have and redeploy it into the markets. Okay, so Again, that could be bad news for the market short term, but as always, you guys, corrections present opportunities in the sense that you can redeploy your capital and buy product, buy names you love at a discounted rate. Okay, so let me know what you guys think about everything we covered today. The macro analyses are always fun, especially at the beginning of a trading week. Again, I love to see this volatility. I thrive in volatility personally. I hate boring times. I like trading, the risk on, the growth, the revolutionary sectors of the market. That's what we pride ourselves on over in the Waves fam on this channel. So let's hope we see some of these EVs, space plays, biotech names come back. Cryptocurrency will make a comeback, you guys. Those downside price targets just need to be hit first. And again, I'm waiting with bated breath with my dry powder to strike when we do see him. So I'll talk to you guys downstairs in the comments. Until next time, always remember, take action, make waves. Peace.